Andy Jassy does the I told you so dance on the Amazon's Q2 earnings call. Every quarterly earnings call, Amazon does 2 press conferences, one for the media and one for the analysts. And today we are lucky enough to have 2 guests to break each of those calls down. I'm Jassy Boyce, founder and CEO of Avenue 7 Media, co-author of the Amazon Jungle, and host of the Day 2 podcast. Our first guest is Andy Palmer of CNBC. Andy breaks down the good, the bad, and the ugly when it comes to Amazon and tech news. I'm honored to have her join us on the Day 2 podcast. Andy, how are you today?
I'm doing great. Thank you so much for having me.
Oh, my pleasure. Thanks for being here. I have a ton of respect for your work, Andy, and I really appreciate how you dig for the truth from all sides of the story, especially from the third-party seller's perspective. I know that's important to you when you deliver those stories. I do, however, not envy you when it comes to trying to get comment from Amazon, as I know these big companies keep that stuff close to the vest. But how long have you been on this Amazon beat? And can you give us a little bit perspective, a bit of perspective from your experience before we dive into today's call?
I've been covering Amazon now since, 2019, end of 2019. Doesn't feel like that long, but in beat reporter years, I guess it is kind of a while. And yeah, it's a big company and the news is always coming from all angles. So, staying on top can be a little challenging being just one person covering this huge company, but it really keeps things interesting and every day is a new challenge. So yeah, really, really exciting beat.
We like to say over here at our agency, Avenue 7, is every year on Amazon is like a dog year. So, depending on how old the dog is, it's either 4 or 7 years. So it may not seem like very long, but that's a very long time for a beat reporter. First of all, there's just a nonstop barrage of Amazon news constantly. How in the world do you keep up, and do you ever sleep?
I do sleep. I do work West Coast hours most days just because of where the company is situated. But, I'm able to stay on top of things through some pretty useful tools like RSS feeds and post notifications. My colleagues make fun of me a lot because I have Instagram post notifications turned on for Jeff Bezos and his rumored fiance, Lauren Sanchez. So I'm always I want to be the first to know if they post, a photo to Instagram.
Little did you know when you started this, Annie, that that feed would turn into lifestyles of the rich and famous. I imagine it's a little bit nauseating at times to cover that part of it, but wow, what a change he's made in the decades since starting the company.
Yeah, I mean, it's I'm poking fun at it because it is funny, but it is part of covering the company is also staying on top of what Jeff Bezos is up to. I mean, he's still the largest shareholder of Amazon and founder and executive chairman. So it's part of the beat.
Well, thank you for that background, Annie. Let's dive into the Amazon Q2 earnings. You've been in a lot of these since 2019. So there's 3 or 4 a year. Of course, it's quarterly. So there's 4. Do the math, Jason. Was there a difference in tone with this Q2 Amazon earnings call compared to the previous calls?
Yeah, I think, investors were really happy with how this quarter turned out because we're seeing a lot of improvements in some of the key figures that folks care about, like revenue growth, still not quite accelerating as fast as folks are accustomed to, but 11% revenue growth year over year. They had like 6 quarters straight of single digit revenue growth. So that was a positive sign that some of these trends around e-commerce might be improving a little bit slowly. So that was one positive. And then I think a big one is really just the effects of Andy Jassy's cost-cutting efforts appear to be paying off because they beat earnings 65 cents a share versus, I believe, 35 cents a year ago. And so that was big turnaround.
Yeah, absolutely. And, I remember the Q1 call and listening in on a lot, especially the big tech investor calls. There was a lot more talk about fear of recession and doing the hard things like layoffs, etc. Did they bring up the recession at all, or do they really feel like a lot of business leaders do today that this is in the rearview mirror now?
The sense that I get is that the recession that so many economists were fearing is not really going to bear out like they had anticipated, which is a good thing. I mean, a lot of the high inflation that we've been seeing appears to be coming down. I think the one big caveat, though, is that, Amazon executives said on the call that they're still seeing consumers trading down, meaning they're opting for cheaper items. And so for whatever reason, retail spend hasn't quite bounced back as quickly as folks had hoped since inflation is improving. So that'll be one thing to watch, I think, especially as we head into the holiday season.
Yeah, that's a great point. And my sense is on your call, there was a lot less about recession and a lot more about AI. Can you break down some of the AI talk that they spoke about in the media call?
Yeah, so you're totally right that AI is really still kind of the topic du jour in tech land these days. And I think one of the big areas that folks are pressing Amazon on is around AI in the cloud, and sort of, Amazon has said that the first step in a 20-yard race, or I don't remember the quote exactly, but basically the gist is it's still early days and there will be many leaders in the AI space, and don't count Amazon out just yet. And so the cloud is supposedly where Amazon is saying, we're offering all these services for our cloud providers who run AI large language models. And then we're also developing our own, generative AI models as well. So they're saying, OpenAI and Microsoft and Google may be, the talk of the town right now, but we're catching up, and we're still a player in this race.
I have to say, if I didn't have my perspective with Amazon, I was just a pure investor, I would love hearing that. They've got this dominant position in cloud computing, and to know that you can generative AI on their cloud with the tools that they're introducing, that seems like, I actually, Andy, I think one of your colleagues, one of your CNBC reporters coined it the best. We're in the hype cycle right now with generative AI, and Jassy's all about the substance cycle. And I think that's a really strong message from them. It didn't surprise me to hear that they were talking about it. And that's just a heck of a lot better story than the sky is falling and the economy's going to go down the drain, right?
Yeah. I mean, I think Amazon, for one, they were first to market with Alexa. So I think that's why folks were a little surprised that they weren't chomping at the bit to get some type of consumer facing generative AI out there. But at the same time, if you look at, some of their other approaches to new technologies, they're not necessarily always the first. So it's not a huge shocker that they're not, releasing some type of ChatGPT competitor just yet. They're trying lots of different things. So
I also think, Andy, it's a little bit unfair for folks to say that Amazon's not doing anything in AI. I mean, that the Alexa device is a prime example of a type of AI. Of course, they've done AI. They've used AI in their warehousing. In fact, some of that AI is driving people into the dirt that are working at these warehouses. So I imagine in internal meetings, them seeing headlines that they got caught flat-footed on generative AI makes them think like, wait a minute, we've been leading charge with AI for a long time. What about the giants at the gate here? There's pending legislation. There's legislation that's happening both in California and other areas. There have been rumors that the FTC is going to file their antitrust case against Amazon any day now or any month now. There's a lot of court cases. The DOJ is very active. AG's office is very active in beefing up their antitrust enforcement. Was there any mention of any of this stuff in the press call?
There really wasn't. I don't think a single question was asked, either in the press call, to my knowledge, or on the analyst call about some of the antitrust pressures they're facing, which is interesting because, we've been sort of expecting this big FTC lawsuit to drop really any day now this month. And in fact, yesterday, Reuters reported that Amazon is going to meet with the FTC this week for their so-called last rites meeting, where basically Amazon, it sounds very dystopian, but Amazon lawyers can basically make their last case for why the FTC shouldn't file this big antitrust case. So it's seemingly all onlookers and reporters are thinking about, but it didn't come up during earnings.
Wow, they can consider themselves lucky that they didn't have to answer to that. And my pet peeve with all these earnings calls, every time I go and watch the talking heads on the television show say that Amazon only makes money from AWS. And, what you and I have done the math a lot of times in the past and said, look at all of the percentage of revenue that's coming from third-party sellers. And I think I know what they're doing. I think I've finally figured it out. They don't break out the operating income for anything but AWS. Everything else they lump together. They lump their retail business together with their physical stores business, with their seller services, with their advertising. It's all sort of lumped together without breaking out the operating profit. I feel strongly that the third-party seller, which now accounts for 60% of the business, is driving enough profit dollars to prop up the losses from things like Amazon retail, potentially, losses with Prime Video, paying for all that great content that they're putting on there, and then the physical stores, which have been kind of hurting. Have you ever asked them this question? Like, how is it possible that the only thing that's making you guys money really is AWS?
Yeah, I think that is a really fantastic question. And it's not one that I've posed to them personally, but it is one, I think your general thought around services and that really being a profit generator for Amazon increasingly is totally on the money, no pun intended, because I think this actually came up in an analyst note that came out after earnings this week. Is someone noted that Amazon is becoming a services company, and that's because of the just like you said, the increasing advertising fees, FBA fees, and now I think too the Buy with Prime fees. We don't know how much they're charging people to participate in that program, but it seems like they have really big ambitions for where that could go. So I do think that it would be really interesting to see just how much profit these services are generating for Amazon.
Yeah, and that fulfillment point with the Buy with Prime, I'm glad that you brought that up. That fulfillment point is when I believe Amazon can make money off of every shipment. Maybe not every shipment, but in general, off of that amazing storage, pick, pack, and deliver to your door service that they've created that really ramped up during COVID. Fulfillment is an interesting service business. The more volume that you can get, and this includes Andy Jassy's Amazon, then the lower your per unit costs become. So I actually think, Jassy has taken a big hit in the knock that it's not really innovating. I actually think this Buy with Prime program is incredibly innovative. We're instituting some of these services for some of our clients, and the conversion rates go up. The cost is very cost effective. If the brand looks at what it costs them to store, pick, pack, and deliver, it's a very good fee. The increase in conversion pays for that 3 or 4% that they hit. But I think the real play there is increasing the volume so that they can continue to get their per unit costs down and make that FBA Buy with Prime service a profit driver. I think it already is. And especially with the cuts and the streamlining that Jassy's done with FBA. Did they mention Buy with Prime? Did they have any nuggets about that program on the call?
I can't remember if it came up or not.
Yeah.
But, to your point, I do think that Buy with Prime is a really interesting program. And it kind of actually speaks to some of the regulatory concerns that they're facing in terms of Amazon's growing market share. And if this program really shapes up to be a significant one, like it seems to be, Amazon is now getting a cut of sales happening potentially across the web. And it really just kind of feeds the flywheel that they've set up for themselves. And it'll be really interesting to see how that grows.
Yeah, I mean, look, when you own 40 to 60% of e-commerce, the only place to get more business is to go off Amazon, right? So it's a great point. Again, thanks for bringing it up. Grocery is one of those, and back to physical stores. Andy Jassy cut a ton of stores, the 4-star and the bookstores and the grocery. Grocery is a tough business, and it's one of those that's left where Walmart really is the standard bearer, and they have just seemingly failed at every turn with grocery. They had a lot to say about grocery in this earnings call, right, Andy?
Yeah, they did. And, I've been following their grocery off efforts for a while now, and wrote a piece, I think it was a year or two ago, just about how jumbled their offerings are between Fresh, Go, Whole Foods, and then the online grocery delivery component. It really seems like, they're kind of throwing everything at the wall and seeing what sticks.
Yeah.
And so far, nothing has really stuck. Like you said, they still are a, small player in the grocery market in the US and have, face a lot of competition from established players that when Amazon announced they were acquiring Whole Foods, all their stocks went down because everyone thought, oh geez, Amazon's going to eat our lunch in grocery. And it just hasn't panned out like that at all.
They're a technology company. To your point, they're absolutely a services business. Grocery is a tough business. It's low margin. It's highly competitive. A lot of people still like to walk the aisle and pick their own produce. And, I'm in Portland, Oregon. I don't know if you know, I moved from LA again. We move every 2 years. Hey, I'm in Portland, Oregon now. There's Fred Meyer here. And Fred Meyer has an awesome app, and they deliver to my door and for $8. And it's a great experience because they're everywhere up here in the Pacific Northwest, and Safeway the same. So I just wonder, going back to that original comment where it's my pet peeve that Amazon's analysts think that, AWS is the only thing that they make money. If they just put a red line, if they sold Whole Foods off and they put a red line through any of this grocery business other than, sort of the fresh delivery to the door, I just imagine their profits would skyrocket. They're not telling us how much, but they're sinking a ton of cash into a business that frankly, they're just not very good at.
Yeah, it's really a head scratcher. Andy Jassy seems super committed to making grocery work, and he has, to his credit, cut back on some of these more ancillary things. Like they used to have, all these other models around grocery that they were trying out, like fresh pickup stores and Go Grocery and all these, various things. He has kind of cut back on some of those things, which is a positive step, I think. But in terms of whether they'll be able to make this fresh supermarket chain work, I just really am very skeptical. And he's even said, we're not going to grow it until we figure out what works. And what works, I don't know what's going to work, because they do face a lot of competition from those regional grocers, just like you said, the Fred Meyers, the Wegmans out here on the East Coast, even Trader Joe's, that just have, a better experience and better prices and selection.
Yeah, absolutely. Well, Annie, was there anything else that was just, oh my gosh, I can't believe they said that on the call? Was there anything surprising compared to, I know you've listened in on a lot of these things. Anything that really sticks out from the media call?
We didn't talk too much about this, but I do think this is one thing that I was surprised to see Amazon talk so candidly about during the call, which was this shift toward the regionalized fulfillment network that they're talking up and saying, we've moved from this national model to this model where we're delivering increasingly one day and same day from these much smaller facilities that are much closer to the customer. And by the way, we're actually cutting costs while still growing our revenue, which I thought was pretty interesting. I don't know. I wonder if you have any thoughts on that.
I have a lot of thoughts. I feel like they've moved the goalposts when it comes to expected delivery dates and time. Whereas before, they really were focused on the time that it took to get the product out the door and out the warehouse door, FBA door, and to the door. Where it seems like they've made this shift recently where they're focusing on the prime delivery promise after it ships. We are seeing a buildup across our, we mentioned about 120 brands now, Annie. We see a buildup of pending orders in FBA that frankly is really massive. I haven't seen anything quite like it. And I experienced this personally. I bought some cameras. We bought a new home in Portland, Oregon, and I bought some Ring cameras to put on the outside. And I got them 2 weeks after Prime Day. This was an Amazon purchase from Amazon, and the messaging was terrible. And when I called them on and I said, look, how is this 2-day delivery? They said, well, the Prime promise is from the time it leaves the warehouse to get to your door. As long as we do that within 2 days, we're meeting our Prime delivery. And I scratched my head. And I thought, I wonder if that argument would work if you were a third-party seller and delivered 2 weeks after. The answer is no. So I think they've got some fuzzy math that they're working with right now, and they're trying to do, kind of like what statisticians do sometimes, to choose the stats to make it look more favorable for them. Although I do believe that this regional thing is going to work. I think it's just early stages, and I think they're having a lot of growing pains that they clearly didn't talk about. But we're seeing it from the grunts on the ground day in and day out.
Yeah, I would love to hear more information from sellers about if they're seeing things like that, because I do think that what's less often talked about is the process of getting the goods from a seller's warehouse to an FBA warehouse. and how long and complicated that process can be. And obviously, Amazon's not really going to talk about that much because it doesn't have to do with the customer obsession and how fast it takes for your product to get to your doorstep once you order it. But it is something that affects, millions of people and their businesses and livelihoods.
It does, and it does have a residual effect on the consumer too when items that are good sellers run out of stock, because instead of the 5 days or 3 days that it used to take to get that inventory from the brand's warehouse into FBA, now it's 2-3 weeks, sometimes longer, depending on the season. And so it is interesting. I think that they're promoting something that is still very much in the work. I do think long term it's going to work well for them, but I don't think that. I can't let you go. You had an awesome story, as you often have awesome stories come out, and I'm going to read the title. Amazon employees leak secret info that marketplace sellers can buy on Telegram. Holy cow, Andy. I thought after the Ed Rosenberg put his bracelet on his ankle for the next year from the house, that this would become a lesser story, but my goodness, how did you track that one down?
This is a topic that I am personally just fascinated by, sort of how social media platforms are really fostering a lot of black hat and, quite frankly, criminal activity that then flows onto Amazon. And the challenges of policing that and becoming aware of that are still a big problem, even as we see, cases like you mentioned from the DOJ, cracking down on some of these shady consultant types. I've been kind of looking into Telegram groups that promote this type of activity for a while now, and just came across this particular one that was, pretty blatant in terms of the data that they were trading out in the open and how cheap you could buy it. And so that's what sort of led me to write this story and kind of dig into this issue that still persists on the marketplace.
And was it hard for you to find this group? Was it easy?
Like I said, they're trading this data very openly, and this was a public group. I was able to join this Telegram group and sort of monitor it for a week or two just to see the types of messages that were being sent. So as long as you have the link, you can ostensibly join any of these groups.
I shared your article on LinkedIn, and there were some ex-Amazon folks that jumped in and didn't like my comments. But it was like, what more can Amazon do? Isn't this the FBI's job? But I think it really, if they don't do more, and I know they're doing a lot, I think they need to ramp this up because it affects the integrity of the platform, and it really hurts sellers. That's the piece that really gets me going as another pet peeve, as long as we're talking about my pet peeves on this episode, is that, if somebody at Amazon who's being bribed to take down a seller who's following all the rules, and then that seller gets taken down and they're immediately proven guilty by Amazon. And it's a very hard process. Like, our team does this for others. I know Chris McCabe from e-commerce Chris, and he does a lot of good work to get sellers who've done nothing wrong reinstated. But I keep going back to the Politburo reference, because you're guilty and it's your job to prove yourself innocent, and you did nothing wrong but get attacked by someone at Amazon and these middle folks who took money to wreck you. And so that's the piece that really frustrates me, and it gets my blood boiling every time I read these stories, Annie. So I really appreciate your hard work on this to call attention to it. What was Amazon's take on this? I know that they say that they're doing a lot, but you just said it was really easy to go find this Telegram public group. I don't understand why Amazon isn't doing that every single day.
To your point, and about some of the chatter around the article, I do think Amazon is investing a lot of money in machine learning and humans to detect the activity on their site. And then also, we found that they have this internal group that's tasked with monitoring activity on Telegram and Facebook. But I think what the root of the problem really is, because, bad actors are as old as the internet, and they're always going to exist no matter what. I think the big issue really is the employee bribery. And that's something that's within their own house that they can, take additional steps to try to curtail. And what they told me is that they do track and monitor what employees access these, highly sought after account annotations that sellers are seeking out to reverse these suspensions. So they are tracking it, but it does seem like a problem that has been, from existing for many years now. I don't know what more they could do necessarily. That's not necessarily my job to figure that out. But it is an issue that they need to pay more attention to, it seems like.
Totally agree. And the low dollar numbers were also shocking to me. It tells me that the workers that are providing that access are probably not in the United States or the EU, because that, $200 goes a lot farther in Costa Rica, China, or India than it does in the United States or UK. But fascinating story. Thanks for staying on top of it. I know you've been tracking this story for a very long time. I love the article. And look, Andy, I feel like we could talk for another hour. I just want to say, I know you probably got to go run and write 6 more stories before deadline. I don't know how you do it or how do you keep up. But I really appreciate you coming on the show. We got a lot of sellers that are listening. Annie, what's the best way if a seller's seeing something that just doesn't seem right, or they're seeing something interesting about Amazon from their perspective, how can they reach you?
Best way to reach me would be either on Signal, which is like an encrypted app. I have my Signal number in my Twitter or X or whatever you call it bio. I'm increasingly steering people away from contacting me on Twitter or X because, who knows how things are run over there these days. But you can also reach me at my CNBC email.
Excellent. Well, again, great stories. Keep the good stuff coming, Annie. And as always, I really appreciate you always telling the full story, including the seller story, because that's a very important part of this Amazon game. So thank you very much. Really appreciate all your work. And let's do this again. Okay, Annie?
Absolutely. Happy to come back anytime.
Awesome. Thank you so much. It was great to have Annie Palmer on to get her perspective. She knows about the Amazon stories the second they happen, and is always writing great content and looking out for the truths for sellers as well. So I really appreciate her work, and I encourage you all to follow her work on Twitter or X or wherever the heck else you are, and reach out to her via Signal, as she said, if you had some interesting stuff you would like to share with her for a future story. But now we're transitioning to my other good friend and guest, Rohit Kulkarni, who has forgotten more about finance and financial projections and sheets and expectations and Wall Street than I will ever know. And we're honored to have him back. Rohit, how have you been? I understand that you went on a little family vacation. How was that?
Jason, thanks for having me. And you're super humble. We had a small summer getaway, first time in actually 3 years, or maybe 4 years. As in we have had winter getaways, but I think over summer, we made it happen. We were in Europe, in London, Edinburgh, and Amsterdam over like almost 2.5 weeks. It was fantastic. Great to be away from work, away from the US for some time with family and friends. One thing I can tell you, Jason, we talked about this a few months back about recession and about consumer and Europe. Walking around in London and Amsterdam, there are no signs of any consumer slowdown. There is long wait lines in restaurants. Uber has surged pricing through the nose. I think in Europe, there is absolutely no sign of any slowdown. It's a tourist season right now, heat wave or not, people are there. And we loved it to be part of those crowds, and glad to be back, re-energized with more stuff to talk about.
So Rohit, those long lines that you saw when you were traveling around Europe, were those international tourists, or did it seem like they were European tourists, or was it sort of a mix?
I thought it was sort of a mix. It was, to be honest, I felt it was more European, less American tourists. But again, we knew quite a few families from New York and San Francisco Bay Area traveling to Europe during that third week of July. So I know a lot of people, it's kind of revenge summer travel after a couple of years, right? So I think this was the peak, in my opinion, but as in no sign of any slowdown, my friend. So that's good news for our business, right?
It's great news. And, last quarter, the last 3 quarters, really, every time you listened to a quarterly earnings call, every big CEO from the big companies were saying, trouble's coming. There's this inverted yield curve. We were at Roth. All of the economists, not just Roth's economists, all of the Roth economists were saying inverted yield curve. Honestly, Rohit, I'm not even sure what that means, but I know that everyone was saying it. Inverted yield curve means the recession is either here or it's coming. When you talk to your folks over at Roth, what do they attribute that to? Have they ever seen an example like this where that situation did happen, where it didn't end up in a recession?
As in, so far, the last 30, 40 years, maybe last 40 years, whenever we have had an inverted yield curve, there has been a recession at some point, maybe as early as 6 months after that happened, and as late as 24 months after that has happened. So the curve for the inverted yield curve means the cost of borrowing in the near term is higher than the cost of borrowing longer term. So that is typically not normal. Like when you borrow longer term, it's going to be paying you more than what is. So whenever inverted yield curve happens, it's kind of messes up some of the finances in banks, and that slowly trickles into the rest of the economy. We are right now in probably month number 15, 16, 16, or maybe 17, based on how you calculate when the inverted yield curve started to happen for the first time. So we are still, maybe we have another 8 months to kind of go in terms of, if there is no recession in the next 8 months, that means we are living in extremely abnormal times as compared to what we have seen in the last 40 years. Typically 6 months to 24 months is when recession happens after the curve inverts. We are in month number 17. So let's see, we are not holding our breath, but so far indications are probably second half, we are not going to see a recession. In fact, we saw an acceleration in growth rate in Q2 versus Q1. So typically it takes 2 to 3 more quarters before that slowly slows down and gets to zero and gets to negative. So we'll see, maybe in first half of next year. Until then, it's party time in e-commerce.
It's party time in e-commerce. Well said. Yeah, it's great. And, I have to say, Rohit, when we were on stage together at the Roth conference, you and I both kind of said, we're not seeing this. I know all signs are that the magic 8 ball is saying recession is coming, but we weren't feeling it. Certainly in our client base, as we shared when we were on stage together, we weren't seeing this massive deceleration that everyone was expecting. Knock on wood, it doesn't show up, but I sure like the animal spirits today more than I did in Q1. Speaking of those who like the animal spirits, I think Andy Jassy just had a "how do you like me now" moment, huh?
Absolutely.
I think last quarter when we talked, there was a little bit of apprehension. Jassy had been cutting for 2-3 quarters straight. Not a lot of innovation coming out, maybe got a little bit left behind in the generative AI game. And there was a little apprehension, but was there a tone difference? Andy and I talked about this. Was there a tone difference from this quarterly meeting that you set in on compared to previous ones?
Yeah, absolutely. As in, I think Jassy talked more than any average CEO on an earnings call. And we know that Bezos never has been on earnings calls over the last 10 plus years. So Jassy coming in and talking the amount of time that he spent talking about e-commerce, about cloud, about AI, everything. I think he just provided an extremely well-articulated rebuttal to all the things that people were worried about as far as Amazon is concerned. So I thought he did a fantastic job talking about e-commerce improvements, cloud improvements, AI improvements. And I think people are now starting to gain confidence, and the numbers that they reported back to Jassy up. So I thought, and now he's like, exactly as you said, now what do you talk about me? Or that song that you just mentioned, Jason. So kudos to them. I feel Amazon's back and Jassy is kind of on a high horse right now.
Yeah, and probably well-deserved. I tell you what, if I had a quarter like that, I'd be getting on the earnings call too. No reason to hide from that. I'm going to highlight some high-level results and then come back to you, Rohit. And I want to ask you to grade them. I love how you grade Amazon's quarterly earnings. So number one, classic beat on revenue and earnings. Not only did they grew more than projected. So words not often said about Amazon, where they grew both revenue and earnings. They've been, of course, this revenue growth story forever. Number two, operating income didn't just grow or beat. It stinking doubled. I mean, that's incredible. They doubled revenue. So everyone was nervous about the cost cutting. What would this mean? But boy, a lot of that cash dropped, much more cash dropped to the bottom line. Online stores stopped being 0% growth, which it's been for 3 months. It's up 4% to $53 billion. Not really the growth engine any longer, but the AWS was another good story. Little apprehension last quarter. This quarter, they're like, hey, we're up 12% to $22 billion now. Really good generative AI talk. I thought the response to the hype cycle was really good. And then, of course, ad sales up 22% to 10.7 billion. Hello, Facebook, we're coming. 60% of sales came from independent merchants, which I think is a new language. I don't know that I've ever heard them call sellers independent merchants before, but I always have to end on that one. So how about that? What's the grade here with these guys for this quarter?
I would say 4.5 star on a 5-star scale. This was probably one of the best Amazon earnings reports in the last 18 to 21 months. I would put it that way. In terms of, it's been a very long and painful ride for Amazon investors in the last, call it 18 months or so, painfully seeing cuts upon cuts in terms of expectations, painfully seeing the profitability being pushed out, painfully seeing AWS coming below expectations. So I think when I look at the last 90 days and the next 90 days, I think inflection is a very powerful word in investment community. And I think we saw multiple levels of inflection where you have seen something go down for a long time and now boom, now it's going to go up. We saw 3 inflections, I would say, just to kick off this call, is the first inflection was obviously AWS. AWS has been slowing down and now it's going to start to grow faster. Boom, like that's the first inflection. Second is in terms of e-commerce profitability. It's been declining. It's been they overbuilt, they overhired, too many fulfillment centers, too many people inside offices, inside warehouses. And they have been cutting footprint for the last 18 months. And now profitability is inflecting positively, as in they're going to be generating more profits in the retail than what they have in the last 18 months. So that's the second inflection. And the third, which is a much more leading indicator, is amount of capital expenses that they're doing. They said, we are going to be declining capital expenses, which is the amount they spend to build offices, data centers, warehouses, and so on and so forth. That's going to be declining this year versus last year. That's a big inflection on the negative side, but on the positive side for investment community, because they're going to be spending less cash, which means they are going to be generating more cash. And that's the third inflection. So we rarely see these 3 things at the same time. And that's what Amazon delivered.
Well said. That capital expenses, I missed that part. That's really important. Now, capital expense, of course, is a balance sheet thing, right, Rohit? So does that mean their need for capital in terms of investment capital, lending? It's higher interest rates now, of course, right? Even probably for Amazon. How does that trickle down to the P&L? Will the reduced capital expenses, do you think, add to the overall P&L profitability next quarter, in the next couple of quarters?
The way Amazon asks investors to look at their business and grade them is what they call as free cash flow per share. So which is free cash flow is essentially a measure of profitability. It's a step further because Amazon as a business is extremely capital intensive, which means they need to build these warehouses. They need to build these data centers. They need to connect, buy all these last mile delivery vans. They need to build out internet almost for the entire world, right? Through the cloud that they're doing. So as that capital intensity starts to decline, they start to generate a lot more cash on top of the profitability of the current business. So it's almost like profitability is lagging and cash flow is leading. And so if cash flows start to inflect, that means the company is going to use that cash perhaps to buy back shares, perhaps to return cash to shareholders, or even perhaps to reduce their debt burden. So all of those 3 things from an investment standpoint are great outcomes if a company starts to generate more cash.
And I was explaining to our listeners and our viewers when Annie was on, they have 2 press events. They do one for the media and they do one for analysts like you for Roth MKM Ventures. And a couple of questions. Did they bring up Buy with Prime? Did they share any metrics there, talk about any of that?
Not directly, but in terms of Buy with Prime, those in terms of how they feel as growth areas in the business, the investor relations people believe that the regionalization effort along with Buy with Prime together are extremely powerful catalysts for next year. I would love to get your take as well about regionalization, but the way the company is saying is regionalization is unlocking more sellers coming to Amazon and opting for Buy with Prime as well as Prime. And that is helping their e-commerce business overall. So that remains to be seen. But those 2, in my opinion, at least from an investment community standpoint, go hand in hand, buy with prime and regionalization. And so we will see how that shakes out.
And then in terms of this regional restructuring, first of all, I think it's a great idea. And I think it's going to work eventually. Right now, there are a ton of hiccups. What we're seeing on the ground is tons of FBA orders backing up in the pending status, unlike anything we've seen since COVID. Now, once they leave the door, they're being delivered in 2 days, 1 day. But getting them out the door in the first place right now seems to be much slower, which is extending the expected delivery date. And I think they're playing with fire a little bit there because people think they're going to order it and get it in 2 days, not get it when it leaves the shipment. So I do think that these are hiccups, Rohit, and I do think that they have a lot more work to do. I mean, Andy Jassy said it himself, right? He's going to double the number of those regional warehouses. They need more space. They need to move some more inventory. And look, I mean, those fulfillment costs were about flat on growth of 11%. So winning, right? Winning.
And what I would add is another theme that Amazon is trying to percolate into the investment community is like, remember back in 2019, we started this big spend on same-day delivery. And then came along COVID, people forgot that we were doing that. And now we have completed that investment. And now we have more items to sell and more items to deliver on a same-day basis than ever before. They quoted this like almost 4 times more number of items on same-day or next-day delivery versus 2019 levels. So 4 times growth. That's a big jump in the number of items that one company has to deliver the same day and next day. And second, they are also saying that those items are traveling fewer miles, like just to the point that about regionalization and last mile delivery, that those items are traveling 20% fewer miles on an average because they are being stored much closer to the end customer as compared to what they were in 2019. So both ways, more items and fewer miles traveled per item. Those are 2 fantastic growth vectors that the company is thinking that they're on the cusp of doing that right now.
I completely agree. In fact, Rohit, I think I remember being on one of your webinars for MKM and Roth and talking about this, that, all this big investment that Amazon was putting close to $500 million. I can't remember the exact number, but it was a massive amount. Like they spent more to ramp up their fulfillment during COVID than any other e-commerce company combined had spent in their entire lifetime, right during COVID. We had talked about this one and said, they're going to roll this right in to being able to deliver one day once COVID ends. Another story that I thought was an interesting one to bring up is grocery, Rohit. I think by any measure, grocery has been a failure for Amazon. Andy and I were talking about it as well. I don't know of anybody who was a Whole Foods shopper before Amazon bought them and after that says it's a better experience. In fact, it's much worse. But they spent some time. What kind of things did they talk about on this earnings call about what they're going to do to potentially improve grocery, which has been, lackluster at best?
Yeah, I think right now they're more focused on improving profitability at Whole Foods. They admitted that from a sales standpoint, Whole Foods isn't kind of taking off in the way that they would have hoped it to, but from a profitability standpoint, per store profitability is going up. They're also admitting that some of the Amazon Fresh stores that they had launched in the last 2, 3, 4 years didn't work that well. So they are now coming up with new concept of Amazon Fresh stores, which one would expect in the next, call it 12 months or so, we'll start to see those experiments come to reality. And I think the third point they keep talking about is they want to make Amazon Fresh as a mass market product. So they have aspirations for that. They want to go beyond the physical grocery store presence into exclusive grocery only delivery. So they continue to have those aspirations. They know it's a large market. It's a classic Amazon problem that they want to solve. It's a hard problem. It has fantastic rewards, but nobody else has solved it yet. So if there's somebody, then that's Amazon who can solve the grocery delivery problem. And I think for them to be able to solve that, I think they need to figure out Whole Foods profitability, scale it up to Amazon Fresh stores, and then get into the delivery side. I think they're just in the first kind of part of that problem solving, in my opinion. And they admitted that it's been slow. It hasn't been successful so far.
Yeah, I agree. Couple of other interesting points they put out there. They're going to open up fresh delivery to folks who don't, for the 10 people that don't have a Prime subscription in Boston, San Francisco, and Dallas, trying to expand that market again beyond just that Prime. So I thought that was very interesting. Again, trying to get volume and scale. They mentioned that, and I lived this. If you've bought groceries from any one of the Amazon grocery channels, the cart experience is kind of wonky. You can buy a grocery item on Amazon and on Fresh, and then on Whole Foods. They're going to spend some wise dollars, I think, unifying that shopping cart experience. They made it super easy to buy a tennis racket, but they didn't do that with grocery. Well, maybe that will help their business for sure. But here's the real winner, Rohit. They're saying that they're adding Krispy Kreme coffee and donut shops in front of Fresh stores. That'll get me in the door, Rohit. That will get me in the door. I love a good Krispy Kreme donut. So
finally, they figured out what Jason wants. And you've been giving them so many signals over the years, and finally,
I know, right?
In, so
exactly. So a lot of good stuff. And I stumbled upon. I don't even know how I came across this company name, Rohit. A company called Mashkin. I know that Amazon, when I've visited Fresh stores, a lot of their pilot stores up in Seattle over the years, and thought, wow, it's kind of cold. It's a little antiseptic, but there's a lot of cool technology in here. Like I picked this thing up and all of a sudden I put it in my cart, whether it's a smart cart or they moved to the pilot store in Seattle where there was no smart cart. It just knew from what you picked up off of the shelf, these sensors and scanners everywhere. And then, I felt like they were really putting a lot of time and energy behind that as being the way they were going to burst into the grocery scene. And then this company called Mashkin, Mashkin.com, MASHGIN.com pops up and used AI to solve all of those. They simplified it and used AI. So at a lot of venues like concert halls or sports arenas and stuff are using Mashkin. You grab it and you go. Somehow their AI system is able to identify what the buyer purchased. And so I feel like these guys out-innovated Amazon. They had all this brain power, all this technology, and they never really simplified that grocery process well enough to bring in more clients. So did they mention anything about physical store checkout technology or anything on the analyst call?
Not so much. I think it's still an experimental phase, one of the many experiments that Amazon continues to do. I feel smaller, more focused, nimble startups have moved faster, and probably they become an acquisition candidate. Amazon doesn't acquire so many companies, but again, maybe this is the time where they need to figure out what can help accelerate some of these innovations that they have. In the last 3 years, to be honest, they have been focused on certain existential issues rather than innovative issues. So I feel they have been behind the 8 ball from innovation standpoint in the last 3 years or so.
Yeah, I mean, look, we know Andy Jassy can drive profitability. He's got a great red pen. He knows how to cut costs, cut a lot of things like physical stores, a lot of fulfillment centers that were underperforming. We know he can grow. He got the growth back to double-digit growth, which we kind of thought was happening post-COVID bump. But now the open question is innovate. I said this to Annie. I think Buy with Prime is incredibly innovative. But now maybe that they have this breathing room with a free cash flow, they can get back to figuring out grocery. Because right now, frankly, Walmart kicks it butt.
I will quickly say on Buy with Prime, what they've said is it obviously improves their network utilization. So that helps with how the network is being better utilized with off Amazon orders. But also they said that the early adopters of Buy with Prime are seeing better conversion rates. So that's something that they gave this tidbit where some of the smaller businesses are seeing up to 25% better conversion when they add Buy with Prime, and without Buy with Prime, it's much lower. So I think it's a game of conversion, and perhaps it brings back people to Amazon, but that's where the strategic focus is: better utilization and better conversion. So,
and I could back that, Rohit. We're seeing it. We're a Buy with Prime agency, and we have roughly a dozen or so clients that are experimenting with Buy with Prime, and we're seeing it. Increased conversion rates, some of our smaller brands, we got about 120 brands. Some of our smaller brands that have been using it and love it because they don't have the infrastructure in place to do that pick pack for high volume. So we're even talking to some about they're thinking about turning their entire website, their e-commerce website to buy with Prime. I actually think that's a mistake, but having that hybrid option, there's a lot of great benefits. It's relatively low cost. You get to keep the Amazon shopper's customer information in your database. So then you could go out and remarket them to your website. So I think it's early days, but again, I think Buy with Prime is a really innovative idea. I think it's not only going to drive profitability for their on Amazon shipment sales and their off Amazon, but overall, it's going to help them go out and get more market share that they don't already have, right? I love it. I think it's great. Let's unpack a few more of the numbers here. As I look at all the different revenue streams, you got online store, which was basically flat for 3 years, all of a sudden bumped up with 4%. That's a good story for online retail, although it's still really getting its butt handed to them by the third-party seller, which now accounts for 60%. Physical store was actually up 6%, which is interesting considering the number of physical stores that were shut down. The biggest growth story of all their revenue streams was advertising. So 22% year-over-year growth, up to $10.7 billion in the quarter. I'm old enough to remember when they did $10 billion for the entire year. Now they're doing it on a quarter basis. What a story advertising is, Rohit. And how much time did they spend on that on the call?
I would say it goes under the umbrella of all the services they offer to sellers and how sellers are very happy people. I'm sure you'll have something to say on that.
Oh yeah, so happy.
But I think just to add a little bit of context, as in this is this growth rate and the scale is probably significant multiples ahead of the industry. Look at what Google is doing. Google is growing 2%, maybe 3%. Facebook is growing maybe 4 to 5%. Pinterest is growing 4%, 5%. Snapchat is declining 2 to 3%. I'm pretty sure Twitter is declining 30, 40% year on year. So if you look at what the rest of the bigger players are doing in the industry, on a combined basis, they're probably growing at most 2 to 3% year on year. Then comes along this company, which is Amazon, which is probably the third largest advertiser in the world right now, is growing 5 times faster than the industry. So clearly they are taking names and taking share, and they are out-executing like nobody's business. So kudos to them. And the context here is very important, where 18%, we don't know, is that a good or bad thing? But when you say that it's growing 4 to 5 times faster than the rest of the people combined, I think that's a very, very stellar achievement.
I couldn't agree more. And looking at Facebook ad revenue, Google ad revenue for the quarter two, they're about a third of the size right now of Facebook's revenue. Fast growth rate has them closing in hard. And then on Google, they're about a fourth of the size. But it would be an interesting exercise. I don't know how to do the math on this, Rogi, but to see at the current growth rates, what year will Amazon potentially, based on current trends, surpass Facebook revenue? It's not a decade. It's got to be a number of years. So it's an amazing story. It's, again, driven mostly by third-party sellers and the vendors and the merchants that sell on the platform or to Amazon. The other fastest growing 18% year over year is third-party sellers, of course. Fulfillment costs were if you talk about fulfillment costs, they were roughly flat. So you get some growth from third-party sellers, you get some growth from online store, and it just ends up being just a stellar quarter.
And also, I think I'll need to correct if I'm quoting this right, but this was the record high in terms of the proportion of units being shipped by third-party sellers, by as in for third-party sellers. 60% of Amazon e-commerce is now driven by third-party sellers. Although the revenues don't stack up that way, the key proxy there is number of units being shipped for orders placed on behalf of third-party sellers. That's 60%. That's a record high, and that's I think that grinds higher during 4Q as well. So perhaps 4Q is going to be a new record high in terms of the shape of e-commerce on Amazon.
I think you're right. And, you have to do some math to figure out, because Amazon does not report the retail value of goods sold by third-party sellers.
Yep.
And so you got to do a little bit of math to figure out what that GMV is. And I did that again this quarter ahead of our call, Rohit. And I'm going to just tell you what my assumptions are too. So if you take a look at Q2, the seller services, and you figure, okay, 40% of that revenue are FBA fees. Now, the seller pays that, but let's just say that 60% of that third-party seller services are the take rate, that commission fee or other fees associated with selling on Amazon. That leaves about 19.4 billion in seller fees collected. If you divide that number by the average take rate that Amazon takes from those retail sales of 15%, you get about $130 billion in GMV. Now, it's not perfect. Amazon's not reporting this, but that's the math that I came to. So, you're approaching almost 3 times the GMV revenue.
Yep.
Amazon retail is doing. That's a lot of money. That's a lot of business being done on that Amazon platform. My pet peeve, right, Rohit, is like Amazon only breaks out AWS's operating profit. Everything else, they munch it up together. I'm going to talk about that in a second. But what did you like? What did you like hearing as an analyst about the AWS story, there was a little bit of shakiness last quarter, right? Before this quarter results. What did you like that you heard about AWS?
The cloud is still slowing down. I think cloud trends are still slow because of what's happening with enterprise software. But I think what we liked the most was that the slowdown is behind us. They said trends are stable from Q2 to from 1Q to 2Q. Things were slowing down, but now they're stable. And now we think the trends would start to accelerate. So once investors love acceleration, and now that we almost paint like a V shape developing, and we are at the bottom of that V right now. And that's what is very, very encouraging for investors, that cloud trends are going to improve. And then there is the AI cherry on top. I would put it that way. If there's a company that can crack the AI code, is able to crack the AI code, Amazon has to be in the top 2 or 3 in that contention. And if that's the case, then this bottom of the V accelerating, and then there is AI on the top. So it feels the sentiment dramatically shifted overnight, and now we are looking at accelerating trends and plus AI that could kind of be a fuel to that fire in a way. So
well said, Rohit. Absolutely. AWS is going to be where you Gen AI. Come on over. We'll manage the cloud services so that you can do what you need to do. And by the way, we're building our own chips that, will lower our costs so that we can pass on to you. What a great AWS story.
Amazon is going to be the app store of AI in the next 5 years. So let's see if that happens. But it's kind of like you come, bring your own data, bring your own model. We have the infrastructure, we have the compute, we have the cloud services, build apps on AI at Amazon and launch them. And so we are the app store of AI. And that's what Amazon is trying to become in the next, 3 to 4 years. And if they are successful, then there is no ceiling as to what AWS can become.
I would bet on them, Rohit. You heard it here first, folks. Prediction from Rohit. Amazon's going to own this Gen AI space. And of course, you do it on the cloud. But here's what drives me crazy. Okay? We talked about this the last time we were together, Rohit. Ad revenue for Amazon at that 10 point whatever billion dollars it was, the margins on that's got to be 70%. So 70% of the ad revenue for Q2 is $7.5 billion in ad profit alone. 7.5, that's a lot bigger than the operating income for AWS. Why can't we see that? Well, Amazon does not break out the operational profit for all those other revenue streams. It's got to be this answer, Rohit. I've been obsessing about this since we last got talking about it. It's got to be this. It's got to be that Amazon.com is losing money. The physical stores is losing money. Some of that Prime subscription, potentially Prime Video, is losing money. They're mucking it all up in there. If you just pull out all the ads and the 3P services together, it just has to be the case that those two revenue streams dwarf the operating margin on AWS?
I think you're close to reality. I think you have a better sense as to how advertising stacks up versus the rest of 3P services. But all I'll say is it's very hard to unpack that puzzle. Like Amazon can, as you said, mucks it up in a way where it's almost next to impossible for us to figure out the standalone profitability of each of these lines of businesses, because there are linkages across them that make it very harder to kind of peel the onion, if you will. But I definitely agree with you. Like advertising to some extent is subsidizing a lot of other growth areas, masking a lot of unprofitable businesses that Amazon currently has, and just helping them grow overall profits in a way that without advertising, it would have been a completely different story for Amazon.
Yeah. Good on them for continuing to pour money at this grocery problem that they're not very good at. I can't help but think from an investor perspective, if they just killed those stores and invested in cold storage delivery in their regional centers and just did grocery that way, forget about stores. If they cut back in some of these other areas, imagine what their profitability could be. I mean, it could be 2 times or more what you're looking at right now. And I would imagine an investor would like to see that. So maybe that's another reason why they don't break it out and share it. They don't want the investors saying, let me get a dividend for once from you guys or something like that. I don't know.
I wouldn't be holding my breath for Amazon anytime soon. So
fair enough. Okay, so looking ahead to Q3, Rohit, what are investors going to be looking for besides your prediction, which I think you're spot on about with AWS?
Obviously, we had a pretty good start to Q3. We know what Prime Day looked like. So I think e-commerce, probably increasing margins on e-commerce is what people will be focused on. Accelerating AWS trend is something that we think is more likely. And finally, anything around more market share they'll take away from Google and Facebook on advertising. So those 3 things, kind of the stock doesn't stop here. It goes up and it continues to grind higher into Q4.
Yeah, right on. I asked Andy this question because Amazon has a lot of barbarians at the gate, right? They've got a lot of legislation that's in the courts. They've got, a DOJ who's very antitrust active, an FTC who's rumored to any minute now announce an antitrust lawsuit against Amazon, various other agencies also looking at them both internationally and here. Any mention at all about future legislative or administrative action or court action against them?
Amazon always kind of shuts down any such conversations amongst investors, as in they tend to have an extremely short and textbook answer that we do not comment on any existing pending or potential litigations or whatnot. So you'll hear from us when you hear from us, kind of a thing. So it remains to be seen. Just from investors and investment community, I think just somehow I feel that the potential risk of any new litigations, any new legislations is kind of fading to some extent. With the stock doing so well, with the underlying business doing so well, I feel the company as kind of a good kind of steward of capital, as a good steward of citizenship is kind of, maybe it doesn't feel like that from your side of the table, but at least from investors, it feels the sentiment kind of shifted versus where we were kind of last year or even earlier this year.
I think you're right. And, when I started to see the news reports and, talking to folks here in the rumor about the FTC case, I'm reminded that they filed an antitrust lawsuit against Facebook and Google. One of them as early as 2019 and one of them earlier this year. And so far, no ill effects on those 2 businesses in terms of the legislation. So, it's a situation where I think these big tech companies are so powerful. They do more good than harm. I'll be the first to admit that. Although they really piss me off when they screw over small businesses and sellers. But I think you're right. Even when the news does drop, it's not if, it's when. I don't know that there'll be much of a hiccup on the stock price. I'll be watching it very closely, as I'm sure you will, Rohit.
Perhaps on the margin, we won't come to know you guys, you from the seller community and people who are much closer to the business would come to know about some operational changes, or maybe there are some concessions that the company would be willing to make just to make it stand out as an even better citizen of the overall ecosystem. Perhaps, maybe. That could be one of the first things that would come out of this. You would be the first person to know, I guess, Jason.
Yeah, and I would be happy with a deal. Let's make a deal. Open up FBA so that others can offer that same service so long as they meet those strict requirements and a level playing field. Get rid of some of these other things that are really harmful to Brain's overall business. So it'll be fun to watch, Rohit. I think you and I have been talking about this legislative and this antitrust action for many years, and I think it's finally come to a head. So we'll see. Last quarter, and even I think Rivian played a part in their results from last quarter. Was there any news, any positive or negative effects from Rivian investments? I'm asking this, Rohit, specifically because I'm in Portland, Oregon now, and I see almost as many Rivian trucks and SUVs on the road as they do test hits. It's amazing. They're everywhere.
Wow. That's a good data point. I'm going to use that, Jason. But I think at least in the most recent quarter, I feel it was almost like a non-event, as in Rivian as a company and as something that could drive with the bottom line for Amazon from the fluctuations in the stock price. That seemed like almost like a non-event. So I know in the past we have seen Rivian stock fall dramatically, and that has changed on the margin some of the bottom line reporting that Amazon has had to do. But in the most recent one, it was almost like a non-event. So no news is good news, I guess. So
I think so. That's good. That's good news. And Rohit, as always, it's a pleasure getting together with you every quarter and breaking down Amazon earnings calls. Just recapping Andy Jassy. How do you like me now? What a great Q2 earnings call he had. The double whammy there, you're growing revenue back to double digit and doubling the profit to the bottom line. And folks, just a reminder, you heard it here first. Rohit called it. AWS is going to be a huge player in generative AI. And if you're in the generative AI game, you're most likely going to be on AWS. I would love to see Amazon share the GMV numbers from those 3P. I'm not going to hold my breath. They probably won't. But clearly, from my perspective, looking at these revenue streams, third-party sellers are not only helping Amazon, they're funding a lot of these things that are doing so great. Hiding on their
Let us just start this. Jason, Amazon, tell us when you hit $1 trillion in GMV. I think that happens in the next 24 months. Let's just make a call to action. Amazon, tell us when you get to $1 trillion. Okay,
do it. I love it. Let's send a letter to Andy after the call, Rohit. We'll co-sign it with you.
Absolutely.
Awesome, my friend. As always, thank you for your amazing insights. Thank you for being a friend of the Day2 podcast and coming on every quarter. I'm already looking forward to next quarter's call with you. Good luck recovering from vacation. See if you can keep that post-vacation glow going into the rest of the month, Rohit.
Absolutely. Thank you, Jason. I really enjoyed the discussion, and thank you so much.
Thank you, brother. Appreciate it. If you're ready to start growing and protecting your brand on Amazon with a team of experienced Amazon operators, you can visit us at day2podcast.com. That's day2podcast.com. And lastly, if you know anyone else who would gain value from this podcast, please share it with them. Thanks for listening and happy selling.